What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is December 30th of 2018. Well, folks, I hope y'all are having a wonderful day wherever you are, and I hope y'all are excited for the upcoming new year. I know I am as well. Today, we've got a lot of different things to discuss on the update. As always, we'll be spending some time to take a look at market valuations, as well as doing some technical analysis on not only Bitcoin, but also some of the other altcoins in the crypto space. Outside of that, though, in regards to headlines, we've got a few things to discuss. I want to spend some time to share, again, an important resource that I've talked about before, but I think is important in using to understand the longer-term cycles of Bitcoin. But we'll also be talking about some news with Kraken launching more margin trading options, as well as Bitmain and the current situation that Bitmain faces as a company, as it recently got its IPO rejected by the government. And I also want to spend some time as well to talk about traditional markets and how we just saw another major slump within existing home sales, as well as a major reduction in the reserves of oil tankers in the world, which again speaks to what we were discussing in regards to the price of oil in the last episode. So we've got lots of things to discuss, guys. I've already rambled here in the intro, so you can guess there's going to be a lot of rambling later on in the video. Let's not push it off any longer and dive right in to the update. Alrighty, so let's go ahead and take some time to look over cryptocurrency markets over the past 24 hours. Most things are in the red at the moment. This is obviously coming as a follow to Bitcoin, seeing a slight dip over the past 24 hours. But really, we've actually been able to hold quite nicely. I think a lot of people were thinking that we were breaking below the line that we've talked about before, this descending line of support. But we've actually been able to not only hold on it 3 times so far, but it looks like Bitcoin is showing some resilience and actually might carry back to the highs and hopefully get above the 50-day moving average. So we'll talk about that as we go through the video later on. But again, over the past 7 days, market's quite neutral at the moment, holding towards the highs, what we saw as of recent. Market valuations are looking quite nice here. Again, holding relatively flat, holding that 30% leap up from the bottom. Again, signaling that we've got some more room to go here. I'm going to step back a little bit here on the quarterly and just talk about really how far we came back with this correction. We still have about $70 billion of valuation wiped off of coin, the overall cryptocurrency market cap valuation. So it's very important to realize that we could very well see us get back into a range around 150 to 160 billion as we step towards the level that I've been watching, which is 5,000. I think 5,000 is very much a plausible target to reach once we pass the 50-day, not to mention when we make support of the 50-day. That's going to be an important step moving forward. But with the lack of volatility, this is giving me a little bit of confidence. We have stopped seeing the sell-off that we were seeing back here. So again, altcoins holding their fair share as well. And as we talk about with market dominance, I think it's very plausible for Bitcoin dominance to break below 50% and for some of these altcoins to start picking up, as we'll take a look at some of the TA elements back in the next few minutes as we go over to taking a look at the charts. But it is important to focus in on Bitcoin first. I want to spend some time to jump here to the monthly. Again, we can start to see we're getting some resilience at this level at 3,000. Take a look at the weekly, even get a clearer picture. What was looking like a candle that was going to roll back over might actually turn green, and we might be able to see some upward movement as we go into the close of December here, and possibly another green week here going up to 5,000. So let's go ahead and take a look at the daily here, and I'll try to provide some rationale as to what I'm thinking. So again, I don't even think that we've fully confirmed a bottom yet in this market, guys. I have no doubt that we could come back down to these lows at 3,000. Again, the market uncertainty right now, not to mention a lot of the catalysts that we're going to possibly bring, positive price action or price, have been pushed off. BACT has been delayed. It's looking that it might even see another delay from its announced launch in late January. Bitcoin ETF, the SolidX one, the SolidX and VanEck Bitcoin ETF is going to be decided on in February. I have my doubts that it will get passed. Maybe that's a contrarian indicator. Maybe you guys can bet that it's going to get passed now because I was so confident on so many of the ETF proposals. But being more realistic, guys, with some of the SEC's concerns, I do see that getting pushed back to somewhere around Q2 of 2019, if anything. So that being realized, we have some things to look forward to, but I don't know if we have anything yet that's going to push markets fully ahead just yet. Not to mention, again, if we take a look historically, bottoms take a while. So getting that out of the way, that's more the long-term picture. In the short term, we do have some rounds for optimism, and you can find these after very sharp corrections in markets, even though bottoms haven't been completely found yet. So what I like here, for example, is that we are continuing to hold on this line here that was previous resistance. Again, testing it multiple times over here, and it looks like price might start to pick up. If over the next 24 to 48 hours, if you start to see Bitcoin pick up, not only will we get back up to this range, which was previous resistance, but if we can close above that 50-day, I think you're going to get a continued rally. And it might even be good as well once we get above the 50-day to come back down, find support on it. But it might be enough momentum for this to just keep picking up. When we start to get in this range up here and get past the previous price action of these past few weeks, you start to get in this range over here where you really had two major sell days that made up the majority of depletion in price. And it's tended that with a lot of price action, if you tend to find that in the past, price action to the downside was in a very short period of time, was in a very short window of time as well. In this case, you can start to see prices correlate the same way to the upside. I found that a lot in equities. I found that in Forex sometimes, that in this case, you'll not only get matching price action, but you'll get matching volume, which again can justify that price action increase. So what I'm watching for here is the 100-day descending, and I think we could easily get back up to 5,000. It's a big even to chase, but at the same time, if we get back up to 4,000, that's only a 25% increase. It's not that crazy, seeing as we've already seen a rebound from the $3,100 range. So I think it's very likely in this case. Again, waiting to see it get above that 50-day. If we get rejected, yeah, we'll probably roll back down and test these lows again. So again, that's what I'm watching for at the moment, but I'm much more confident in the sense that as much as in the long term, I'm still waiting patiently before I make any additions to crypto, that we're going to be seeing a potential rebound to 5,000. And then we might hit some resistance there. So let's go ahead here. Let's take a look at Ethereum. You got to take a look at the USD chart. Ethereum has been catching a lot of people's eyes. The volume has not only been great across the board on most exchanges, but it looks like right now, as we're talking about with Bitcoin getting above, getting up to 5,000 and testing up to the 100-day moving average, I think Ethereum could very well come up and test this 200-day. Again, you're talking about a declining indicator here, so it's already setting up an easier picture here. But along with that, Ethereum has just been showing a lot of resilience in price. When Ethereum broke down past the 50-day, a lot of people were worried that this was just a short-term relief rally and that this was going to go downward. But in this case, we've actually gotten back above that 50-day. And as we've talked about with Bitcoin before, I like to watch for, especially towards these levels where we're talking about potential market bottoms, where Bitcoin and previous cryptocurrencies go down below their 200-day and then they come back up and they get above their 50-day and their 100-day. I think in the case of Ethereum, it's not too crazy to think that this will make contact over the next few days with the 200-day moving average, again, as it's declining here. And I think what you'll actually get is the stars will kind of align here. You're going to get it coming back up to this range here around $200. And again, the 200-day will come in to make contact with it. So I think it's going to be somewhere in this range. Again, can't really predict too much right now. There's not much TA to work with. Ethereum's price is a little bit shaky, but I think you could definitely see a run up past the 100-day, support onto that 100-day, and then a potential test up to the 200-day moving average. How long is that going to take? I think it's going to be somewhere well into January, so I don't think this is something to expect next week. But the pace is definitely picking up here. I like to see that on Ethereum. It shows that in this case, there is a little more risk-taking in markets to see this happening to some of the leading altcoins. All right, so let's go ahead and take a look at XRP. XRP, look, I got to give it to XRP and the whole fan base of Ripple. I do like more than anything that this has been holding what appears to be a steady uptrend line, not to mention has been continuously finding support on the 50-day. So in this bear market, XRP has been one of the few saviors where, not only, Bitcoin has obviously declined, but to keep up with Bitcoin and not be depleting like most altcoins did, got to hand it to him. It's been a definitely positive switch for a lot of people to get into XRP in this case. But can it continue to hold the steam? The moment this breaks the 50-day, I'm going to get a little bit concerned. But I want this to keep holding here. And if it keeps holding here and it actually breaks above this area of resistance that we've seen price get rejected at around 10,000 sats, you might get a continued breakout with Bitcoin going to potentially 5,000. So I'm going to be keeping an eye on XRP. I'm very excited to see this kind of positive price action in some altcoins. It shows that risk taking might be around the corner, but again, we're going to need much more volume than this for a real altcoin cycle. Nonetheless, I like to trade short-term cycles as well, which don't require as much volume. All right, let's go ahead here. We'll go ahead and take a look at some of the versions of Bitcoin Cash. I know we've talked about this. I'll go ahead and take a look at the Bitcoin Cash Satoshi pairing. One thing I'm noticing here is price is wedging at the moment, and I got to say volume has still remained relatively strong. But I mean, obviously, guys, you don't need to be a genius here. You can see that price is starting to wedge in. So my main goal here is to keep watching this, see if we are able to hold here. If we are, we might be able to get a nice trade up here, nice 50% run up from the current levels back up to $120. Very well could happen, guys. I mean, look at the volume that we get towards these lows. We start to get it picking up here. I think we could very well see that here as well. But it's a matter of this holding, right? If we get a break below here, I think Bitcoin Cash SV or Satoshi's Vision will probably break down. And again, this isn't me supporting the project long term, guys. It's just simply trading it. But I'm definitely not looking to hold this long term. I don't really care about the Bitcoin Cash fork or ABC or SV in this case. I don't really care about either version. We'll go ahead and take a look at Bcash ABC as well. Check how that's looking at the moment. Now, Bitcoin Cash ABC got a major rally the other week after a pretty dramatic sell-off as well. I think that's honestly what happened. It was some people coming in at the bottom, people with obvious interests coming in to prop up the price, much like SV as well, and people speculating generally. But I do like, nonetheless, that this is holding quite nicely. If you can start to see the price action cup here, retest the highs here, or at least relative highs, and get a handle, you could get a further breakout back up to the highs up here. But again, not making any serious moves at the moment, guys. Don't see any reason to be that confident on it, especially now that we have the currency split off where a lot of the hashing power is over on SV. And in this case as well, you've got most of the users on ABC. So it's not a good dichotomy because you want both. You want the hashing power. Craig Wright makes a decent point in the sense that hashing power is what secures the network. It is what drives proof of work networks. But at the same time, you've got all your user base over on the ABC chain, and you've got a lot of the big figureheads like Roger Ver and Jihan supporting this. So, it's not a pretty situation in this case. So, again, I think it's kind of like most wars. There will be two losers instead of one. So, anyways, I think we've gone through a decent amount of altcoins, guys. There's obviously a lot out there like Neo, Icon, EOS, Lumens. We have a lot of players that we're keeping an eye on, and I'll try to spend some time in the next few updates to go over those when I find some value. But I think it's good to be taking a look at these market leaders because really, they've been where a lot of the awesome trading opportunities have been in this case. Whether you like Bitcoin Cash, whether you like XRP, that is where a lot of the moves have been going. Now, I want to spend some time, again, to talk about that long term of Bitcoin. Again, this is an awesome website called moonmath.win. Gives you a really good idea of the rainbow chart here on the logarithmic chart for Bitcoin as to where we are in regards to price. And it's something you can always turn to. It keeps updating price over time, as you can see. And we're stepping into 2019 here. And this is a much longer term chart in this case. This is something I think you should turn back to from time to time to realize where we are in this progress. Because I do believe the logarithmic chart, though it will rarely hit this higher band up here, the purple line, I think we're going to see a repetition of hitting this higher band over here. And again, if this keeps playing out, if Bitcoin keeps holding its dominance like it has, then this will give a clear indication of where we're heading over the long term, and we will see much higher price ranges. As you increment higher on this logarithmic chart, it's exponentially higher in this case. You get much higher levels. So again, this speaks to the longer term belief that into the 2020s and towards 2030, as I've talked about, that we're going to see Bitcoin become a major reserve of store of value. So we'll have to see if that holds true. Let's go ahead here, talk a little bit about some news. For those of you who trade on Kraken, Kraken has just listed Bitcoin Cash and Ripple margin trading. The reason I want to share this is just to let you guys know, but at the same time, I don't really advise margin trading. Then again, I can't give you guys financial advice. It's just me personally. I don't believe crypto is really ready for average everyday margin traders. There's too much manipulation. There's too many BART charts, too much, fake stuff going on in the crypto space, right? The amount of wash trading there is right now, as well as market making, makes this market a little bit thin, and it's easy to manipulate in this case. So anyways, there's some margin trading opportunities here. And again, you can do 2 or 3x to 4 or 5x on some of these pairs. Much better margin trading levels, I think, for average everyday traders than what BitMEX is offering. But again, my major point here is that if those of you who can't get access to BitMEX, like I can't because I'm in the United States, then you guys have this option. And I know many of you use BitMEX either way, but again, I'd recommend it to stay to the regulatory standards here. Anyways, going on, I want to spend some time to talk about Bitmain as well. Bitmain has obviously gotten a lot of flack in the media as of recent. There's been a massive firing of Bitmain's workforce, where it was recorded that 50% of the workforce is getting laid off. And some people like Samson Mao were estimating that it's going to be all the way up to 80%. I don't doubt it for a second. But Bitmain itself, as much as they've gotten their IPO rejected from the, I think it was they were going to list under the Hong Kong exchange, one of the major Hong Kong exchanges. But outside of a lot of the negative news in regards to lackluster sales and the IPO rejection, and also some of the disagreements between Jihan Wu and Zen, who is one of the other heads at Bitmain in this case, there's a lot of negative publicity and press, but there's actually some positive things as well about Bitmain. I'm not a major fan of Bitmain. I don't really have an opinion on it. I've never gotten excessively involved in the mining space, but I do understand some of the politics of it, as well as some of the pros and cons of some of these major companies. So if you go through here, they talk about really the fact that there's not only inner drama within the company, but there's also a posted $400 million quarterly loss for Bitmain. Now, a lot of people think this has to do, from what I can analyze in this case, with 2018 being a bearish year for selling miners. And I'll be honest, I don't think that could be further from the truth. The only thing you have to look at for this case is hash rate, right? From the beginning of 2018, hash rate has spiked. Bitmain, I think, had some great sales going into this year. That's a big thing the media is getting wrong in this case. Bitmain, as well as a variety of other mining companies, but Bitmain predominantly had huge quarterly sales. And this is why they were walking in so confidently to the IPO. But not only with the rejection of the IPO is that a bad thing in this case, but you also have the fact that they overproduced, right? They overestimated that this would continue. And they were actually quite fortunate that people didn't stop buying miners back in 2018. Like right when the year started, they actually still continue to sell quite nicely. And that's the thing, is it's just like actual commodity markets in a sense, which is, again, going back to the correlation between proof of work and gold mining and all these other commodity-based sectors. They move in cycles, and sometimes companies overestimate what they can produce because Bitmain is going to be producing as much units as they think they can sell. And in this case, they did overproduce. People have stopped mining, and this is where we're starting to see the decline here. Not only are people not buying new miners as of back in the fall of this year, right at the beginning, back in September, but along with that, we are seeing a drastic decline in people operating their miners. So what's my whole summarization here? Again, there's a blame game going on and a lot of drama going on within the company. My major summary here is that it's depressing to see that Bitmain is not going to have its IPO. That stinks. But at the same time, I think honestly more than anything that Bitmain is still going to exist. And I have some things, as I mentioned before, I'm quite neutral. I have some negative views on the company. I know some of their business practices I highly disagree with. And again, I don't think that mining is going to, in my opinion, I don't think that mining or excessive hashing power, as we're starting to see on the Bitcoin network, is going to last for the long term. It's something that I'm a little bit concerned about in the long term for cryptocurrencies. But that being realized, Bitmain still holds a foothold in this market. An IPO rejection is not the end of the world for Bitmain. It can remain a private company. So in this case, even if Jihan Wu and Zan step down with the drama that they have, Bitmain will probably persevere, right? It has a very large sense of dominance on the market, so long as proof of work is a thing. That's really, I think, the thing that people should be concerned about if people start to switch off from proof of work. And we've seen more people kind of getting down with the idea of getting away from proof of work in this case, with the excessive amount of power and hash rate that Bitcoin has started to consume here comparative to what it did back years ago. So we'll have to see. I think that's the biggest threat here. Going on, I want to talk about a little bit about traditional markets. We'll talk about the housing market and with oil prices as well, or the oil sector more predominantly. As we can see here, we've had the worst month percentage drop for 2018. It has not been a positive year at all for the housing market. We have been seeing continuous declines here. in this case, with some big months, for example, dropping back in January and February around 4%, but then also amplifying it here in October and November. So we haven't even seen what December looks like yet. This is this is old information from November that just came out. We'll have to see here in the next coming weeks what it was for December. And I honestly don't think it's going to be that pretty. I think it's going to be another negative month, but it might not be as sharp here as it was in October and November. Now, the reason for this is quite obvious. You've got continuous rate hikes, and because of that, with rate hikes comes an increase in the average 30-year mortgage rate. And we obviously saw, as we talked about a few daily updates ago, that as these mortgage rates start to move up fractions higher with the prices that we're seeing in the housing market now, it is not a good combination. It means that the cost to borrow capital for these already expensive homes is going up. And now we're starting to see a reversal of that. Because the market is starting to buy less homes, home sales are going down, you are going to see prices go down, and it is going to set pressure on the Fed and other major central banks to start lowering those rates, and or banks to start seeing a lower profit margin on mortgages, which again disincentivizes them to lend in an already very scarce lending market where it is already difficult to lend out for mortgages. So again, I think it's a matter of giving it a few months here, guys, and we could start to see housing prices really take a hit. We're already starting to see some of the major overvalued areas and cities across the world take those hits. I know, for example, the area I live in, all the new homes have been sold, and we're still struggling to sell the existing homes in this case, in this area. So prices are starting to deplete, right? And we already know as well, not only are as I mentioned, the existing home sales, but also new home sales are going down. Look at this. I mean, if this doesn't send a clear signal, guys, that we broke the trend line here for the uptrend since back here in 2010 with the recovery of the housing market, or I would say really a phony recovery in this case. We didn't really have a fundamental long-term recovery. If that was the case, we wouldn't even have sales up here, right? But in this case, pending home sales as well. Again, actually, I want to see if I can get existing home sales. Or is it pending home sales? Yeah, sorry. I guess I was looking at the right statistic here, but in this case, again, we can see there's obviously not a pretty picture being painted here. It's a matter of patience, guys. Market cycles do take time. And as I have talked about in a positive light in a sense, this is not going to be like 2008. We do not have the immense amount of leverage. We don't have everyday people owning 3 to 5 homes, abusing the system. That being realized, interest rates are getting up to levels that the underlying economy, which has not recovered for the past 2 decades, the past decade since 2008, but really even back during the dot-com era, with the diminishing middle class, diminishing wages in this case in the grand scheme of things, and the wealth divergence in the economy, you are not going to see a major housing recovery. All right, we are going to need a shift in the financial system before you ever get that, where you get everyday people being able to afford homes. There is a major asset bubble that has been propped up over the past decade. It's made things worse. So in this case, again, matter of patience. Going on to talk about oil, as we talked about in the previous video, oil is something that I really think everyone should keep an eye on here as a commodity. There is going to be some value found later this year in 2019 to where I might go long on some oil companies in the equity space. Again, kind of balancing between my optimism and in commodities, but also might dabble a little bit in equities as well. It's usually where you can get a lot of the returns. But in this case, we have seen a major reduction, major scrapping of some of the major oil tankers that used to transport, I think around 40% of the oil, the world's crude oil. So definitely a major key indicator of when the oil sector is consolidating. So basically what they do is they send these huge tankers here to India and Bangladesh, and they just have thousands of people just start to break down these huge oil tankers. It's kind of crazy. I mean, I'll go down to a photo here just to really show you the scale. I mean, these things are massive, guys. But again, they ship these things in and they start to demolish them. But again, just used to carry huge amounts, gallons upon gallons of oil, and used to ship them across the world. But as we've seen, not only the global slowdown since 2008, which killed a lot of the international trade and shipping industry, or at least a lot of it was over amplified, I think, during 2008 with the growth of China. But along with that, you've got a diminishing oil sector where there's a lot more production across the board. The United States is producing more. Again, you've got more pipelines being built, and because of this, it's setting a lower precedent in demand for these ships. And we've got over 100 that are getting taken down in this quarter of 2018. So crazy amount of reduction here. But anyways, again, really important thing to take into mind. Again, these are big macro signs that can give you pictures to where we're heading. And as I've talked about, if we take a look over at crude oil, I think crude oil is still got a ways to go. It definitely looks like it's had a very sharp correction. Usually oil doesn't sell off this fast, but I think we're going to very well come down to this range around $20 a barrel. You're going to see that probably in 2019. It's going to take a little bit of time. You could probably see oil maybe hold up here on the support level at $40. Really don't see it happening. I think people are coming to a sharp realization that serious cuts have not been made. So I think by 2019, we're going to revisit this range down here. And seeing as this has been a descending line here, I think it could go all the way down to $20 a barrel. What that's going to mean for the economy, it's going to be great for consumers. It's not going to be good for a portion of the U.S. economy that is energy producing. It's going to be terrible for Russia and a lot of their major exporters across the world for energy production. And OPEC as well, it's going to be a burden, but they might be able to still produce at a slight profit. Some countries will produce at a loss. Again, lots of interesting macro factors to take into account, and we will definitely be sure to point out any interesting trends or opportunities that come around the horizon. But I do believe there will be some value to be had in equity markets. It's just a matter of patience. Anyways, that's it for the video. Thank you all so much for watching. I hope you guys enjoyed this daily update. And as always, if you guys liked it, please give it a thumbs up, as well as leaving a comment down below as to something that we talked about, maybe have an opinion on something, or maybe something that we didn't even talk about as well. I'd love to hear from you guys down below and get a discussion going. But until the next video, everyone, thank you all so much for watching, and I will see you all in the next video. Stay tuned.